Thank you for coming again. This is Adewale Lawal. I am an investor and realtor in the Houston, Texas market. If this is the first time you're meeting me, please consider subscribing and smash that button so I can let you know anytime I have a new video. So you've been looking to buy a house, but you are still sitting on the fence if you want to do a 15 years mortgage or you want to do a 30 years mortgage or you even want to stay in between. In this video, I will walk you through the pros and cons of a 15 years mortgage as compared to a 30 years mortgage. This is a very common question. A lot of people are looking for ways to go around it, and I think it will really be helpful to make this video so I can educate people and hopefully you get value in this video. So what are the benefits or what are the advantages of a 15 years mortgage? Number one is a faster way for you to become an homeowner, meaning that is a faster way for you to actually possess the ownership of that house. As you all know, if you're buying a house with a mortgage, you technically don't own that house until you complete your mortgage payment to your lender. So if you are if you're on a 15 years mortgage, you will pay that mortgage faster, which shorten the time for you to actually possess the house. That is number one. Number two is you build equity faster. The more you pay down that loan, the faster your equity is growing, which is what everybody is looking for. So that is another advantage. So somebody can have $100,000 in their as equity in their house. Another person can have $50,000 equity in their house. It depends on the kind of mortgage they lock the house in. So that is number two. You build in equity faster. Number three is that you save money because 15 years mortgage is cheaper as compared to a 30 years mortgage. So you'll be getting low interest rate. You will be saving money on the long run, and you're going to cut a lot of things that usually go with 30 years mortgage if you do 15 years mortgage. Number four is that it allows you to be using that your money in as a form of as a savings account, because you're paying so much money there, you can easily do something we call ELOCs, equity home equity line of credit, where you can take out some equity you have in the house and use it to do other things you want to do. You can invest it, you can borrow it to somebody else, you can use it to buy your car, anything you want to use it for. You can take it out and put it as an emergency fund, whatever way you choose to use that money. So that is number four. So now let's talk about the cons. What are the disadvantages? Disadvantage is that because you are paying higher monthly payment. That's number one, higher monthly payment, and which lead me to number two is that your equity will be locked into the house. So instead of you to have extra cash to play with, you are paying that higher monthly payment. So you will not have so much cash reserve or so much emergency fund if you have not prepared for that before you lock in that mortgage. So that is number two. Number three is that you need to weigh in your opportunity cost. Are you going to be buying this on the 15 years? Don't you have any other thing you need to use money for? If you do have any other things you want to use money for, then you need to be clearly sure that it will not affect your other financial commitments. So number four is you're going to be qualifying for a less quality home. So because you are buying a house on the 15 years mortgage, the lender will be weighing in their risk and what are the possibility of you making that payment conveniently every month and consistently. So if they think that you probably will be struggling to meet up that 15 years mortgage and you still insist you want to do a 15 years mortgage, then they will not qualify you for a larger dollar amount. So they might be qualifying you for a purchase price of $200,000 on a 15 years mortgage as compared to $300,000 on a 30 years mortgage. So there is no any hard and fast rule to it. You have to look at your own situation, look at your financial picture, and discuss with your significant other, and eventually come up with what is the best for you. Majority do 30 years mortgage because even if you lock in a house in a 30 years mortgage, you can still be paying a 15 years payment. So it's just that you already lock in that rate, and you have the mindset of a 15 years mortgage, and you can be making that payment. People do this by making extra payment. So if your mortgage is 1,500 every month, you can be making extra $500 every month, which brings you to $2,000 monthly payment. There is no commitment. The minimum you have to make is 1,500, and should you have extra money, just pay it. So that way you are lowering that debt real fast, and you are owning that house as quickly as you can, because you do not own the house until you finish the payment on the house. So you need to assess your situation and come up with what is best for you. For me, on my investment property, I just like to do them on a 15 years mortgage because I want to own the house really, really fast. I don't like paying so much on interest, so that is my personal preference. But at the same time, I know I can afford the monthly payment. So you need to look at your situation and decide which one is really best for you. Again, if you find value in this video, please make sure you share it, like it, subscribe, and don't forget to smash the bell so I can let you know anytime I have a new video. Once again, my name is Wale Lawal, and I will see you on the next one. Bye bye.